All right, welcome in everybody. Thank you for joining us. I see New Jersey. Anyone else? As you come in, please let us know um, like where you're located or any locations that you're concerned about. All right, we got Washington, a couple Washington states. Welcome to you guys. I'm sorry about the Mariners. I was really cheering for them. We merely exist here between baseball games, given last night. I'm in Los Angeles, so we are buried in baseball right now. So we have this brief break before there's more baseball. Idaho, awesome, welcome. Thanks, Ryan. Okay, I'm going to pop up a couple polls as people continue to come in. So I'm Jill James. For those of you that are new to my list or haven't met me before, I'm a small business consultant. I run health insurance enrollment for many of my clients, and this webinar is simply to share the information that I am able to get and the partners that I'm able to work with more people who are trying to go through small business and self-employment insurance underwriting. So this is not a sales call. There's no funnel at the end that we're going to sign you up for anything. You're on my newsletter. I send that out on Wednesdays. If you want to stay on, we'll continue to have more support over the next few weeks for what's going on in the health insurance market and the end of the year. If after you get the replay, no harm, no foul. I'm glad you joined me, but no obligation to stay on. So I'm gonna pop up a couple of polls here to help us get to know you. Ash, are all at the same time? Okay. So there are 3 questions here about whether you purchased your own insurance before, whether you are looking at individual or small group, and what kind of coverage you had in 2025. So I'm going to leave this up for a couple minutes so that you can give us a sense, so that we can tailor our conversation a little bit more to where a lot of you are coming from. So I'm seeing many of you have bought insurance before, but a few of you, it's your first time. Um, Many of you are looking for individual or family. Some of you aren't sure yet. Okay. Lots of past use of the marketplace. Some of you are coming off Cobra. Okay, so this is really helpful. So we've got folks from a bunch of different states. And again, if you're just coming in, feel welcome to put it in the chat where you're located so that we can sort of gauge what states we're talking to in particular. And we just popped up a poll. I'm going to leave it up for about 1 more minute just to get a sense from those of you who are here what you're working on. Okay. All right. So we've got Colorado. Hey, Megan. Missouri. Tennessee. Trying to decide on if credits are going to apply next year. We'll definitely get into that. Virginia, New York City has its own set of rules than New York State. Oregon, Florida, Washington. Great, great, great. All right, I'm going to wind down the poll. So let's see where we ended up. All right, so it looks like about 80% of you are repeat users of self-employed insurance. About 20% are new. It's your first year. We've got some of you are like looking at either individual or small group, or you're not sure yet. About 60% of you know you're in individual market. Lots of you were using ACA plans. I'll put that up so that you can see it for a second. So we're going to work with that in the course of the event. All right, let's take that down. All right, so I'm going to pop up a quick slide deck here and share with you guys. I've got a little bit of overview. All right. So thank you for coming today. This is me. I gave a quick intro, but I'm a small business strategist and consultant. I work with self-employed small businesses. I also write a newsletter. That's probably how you found me. Thanks to all of you who are regular readers. Some of you might be new. And I'm doing this to share the information that I get by managing health insurance for my clients. So during the call, please know the call's being recorded. So this will be sent out as a replay for all of you. If you have questions that you'd like us to answer, please pop those into the chat, into the Q&A, so that we can track which ones we've answered. And you're welcome to share dialogue in the chat as we go. We'll keep an eye on that as well. After the call, everyone gets the replay. You have been added to my newsletter list. If you decide you don't want that, go ahead and unsubscribe, no problems. These are a couple things we're gonna, if you wanna try it out, there's a couple things that we're covering. And if you have questions or follow-ups after this, you can reach us at hello@thejilljames, and we'll do our best to help you out. Okay, so things we're gonna cover today. We have individual versus small group health insurance, what's going on with subsidies, some small group alternatives. These might be some acronyms that are new to you, and some individual alternatives. So we're trying to look for options. If it turns out that the ACA isn't going to be an option for you this year, what are other things that you can do? And I have two awesome guests here. Michelle is a national broker with Alliant Insurance Services. So she does small and large group underwriting and also alternative coverages, so not just ACA stuff. And Ryan Smeets is from Venteur, which is an ICRA, might be a term that's new to you all, which is another alternate way to offer insurance to your employees, and possibly depending on how you're organized for yourself. So I'm going to do a quick overview of the current environment, and then I'm going to hand it over to Ryan because he's with us just until 12:30. So we want to make sure you guys get the background on the ICRA. So this is what's going on. For those of you who've already gotten your bill, it might be significantly higher if you're on the ACA than it was last year, and you may not have expected that jump. So when on November 1st, all of healthcare.gov opens, you're going to be able to see what you qualify for based on what you had last year. So July's tax bill ended the extended tax credits and readjusted what percentage those who do qualify for subsidies have to pay. So if you had a subsidy last year, you may not have a subsidy this year, or it may be much less than it was. There are still some options, but they are only plans. So if you were on a bronze plan, your subsidy has been taken off entirely. It doesn't mean you don't qualify. It just means if you continue on a bronze plan, you won't qualify, which is a little weird because bronze has been the cheapest option for a long time. So just something to know. I'm seeing people post on Threads and in other places freaking out about how expensive their bronze plans got. And in part, it's because of the plan that they chose last year. So with this total change, with costs going up across the board and more self-employed and self-insured people having to pay more, insurance companies are anticipating that a bunch of people are going to drop out. So across the board, whether in the ACA, outside the ACA, on employer plans, costs are going up for everybody because we're expecting a smaller group of people to participate. So know that no matter where you are, no matter what kind of plan you're in, everybody's having higher prices. So it's not just you, and it's not just individuals. These are the new tax credit premium tables. I'm going to send this out to you because we're not going to go into this in depth, but this will be, you will get this in the wrap up. But basically, like what you're going to see here is that this was what your tax credit was last year. And this is what your tax credit is this year if you're an individual at these incomes. So you'll see, like last year, if you were making $45,000, you were expected to pay $2,475 out of pocket. And this year you're expected to pay $4,311, right? And you see there's a cutoff here after 400, whereas there was a phase out last year. So not only are you getting less of a tax credit, but it phases out more quickly. If you're a family of four, again, there's still credits for up to about 120,000, but you will notice that like when you get into the 110, you are expected to spend 10% of your annual gross income of your adjusted gross income on health insurance. So that's like where some of these numbers are coming in, like when you're getting your renewals. So what we're going to talk about today is making sure that you understand the ACA, and if you are priced out, what else could you do? I'm going to bring this back up after we talk with Ryan, but in terms of individuals, their medically underwritten plans, association plans, catastrophic coverage, and in states with mandates, there are emergency waivers. In small groups, direct purchase, ICRAs, which might be new to you. Ryan's here to talk about that. PEOs, MIWA and association plans, and medically underwritten plans. All things you may not have had to deal with in the past because the ACA was the right option for you. I'm going to save talking to you about individual versus small group qualifications since I want to make sure that Ryan has enough time. So let me bring on Ryan Smeets from Venteur. Venteur is an ICRA platform. And Ryan, I know you're going to go into more detail on what that is and how it works. This is most likely to be a small business solution for you, but some of you as individuals may also be able to use this. So Ryan, you want to take it away?
Awesome. Thanks everybody for having me, Jill. Thanks for hosting. Yes, I'm with Venteur. And like many of you, I actually started my journey as a small business owner myself. So I actually have my own staffing company in the healthcare space. And this was always a challenge in trying to find healthcare. And ICRA popped up a few years ago via executive order. And so what ICRA stands for is the Individual Coverage Health Reimbursement Arrangement. That's a mouthful, okay? But if you're familiar with the individual market because you've purchased plans there, that's essentially what this allows. It allows small businesses to take advantage of the tax implications that you would otherwise on a small group plan and apply it to your business. So what does that mean? It means that you, in the simplest sense, provide pre-tax cash to your employees. Think of it as an allowance or a stipend that they can then use to go onto the individual market and purchase a plan. So think about it this way. You give them $500, a flat amount, or you could do a percentage based upon one of the tiers, bronze, silver, or gold. They take that money, they go into a platform like ours, they see how much they get, and they go through an e-commerce shopping experience where they can see the on-exchange plans, the off-exchange plans, which are directly from carriers, and they can purchase a plan. We as a business, as a technology platform, function both as your broker and your benefits administrator. So if you've got multiple employees, seemingly all of them could have different plans based on their age and their location, since these are all individual plans. I've got a few slides that I'll just walk through. I've shared this with Jill. She can share this with you guys later. I'm not going to go through all of it, but this will just give you a better sense of what ICRA is. Okay. Ideal companies for ICRA, mostly small businesses under 50. Any businesses facing high renewals. The reason being is you can stem that cost curve of the rising rates every year by just saying, here's our budget, this is what we're going to give. And the analogy I like to give there is what happened between pensions and 401ks, right? Instead of just a business saying, hey, we're going to invest your money and hopefully bring you a return, the business gives you the money in the 401k and you get to invest it. That's what this is in healthcare. It's this shift to a consumer-based healthcare approach where you as the employer provide that stipend, that contribution, and then the employees get to decide how much healthcare they're going to consume. They can choose a bronze plan or they could choose a gold plan. This is like not the exhaustive list, but really we're seeing the biggest lift right now in remote-based workforces. For some of your organizations where you have people all over the place and you can't find that you're eligible for a group plan or the group plan has a ton of out-of-network costs for other folks, ICRA might be a good solution. This just kind of shows you what it is in terms of the differences between group insurance versus using Venteur or a platform like Venteur for ICRA management. The nice thing is you get a trade-off, right? Somebody else is basically becoming your benefits administrator, and that's freeing up your time to do a million other things that you got to do in your business. We handle all of the compliance, all of the enrollment, and then all of the ongoing support. Since these are individual plans that your people would be choosing, they have to deal directly oftentimes with the insurance carrier, and that can be confusing. So if you need help, that's what our team of 75 across the country can do, both help you pick a plan and then obviously deal with the insurance companies as you're going through it. And if you're looking for the compliance side, we handle all of that too. So your PEOs, fees, your 1094, your 1095, all of that stuff is included. We have this really interesting concept that blends the HRA, which ICRA is, a health reimbursement account, which is maybe similar to an FSA or an HSA that you've done in the past. So what that looks like is you provide that pre-tax cash to your employees. Our platform guides them on spending the plan. So in this example, the employer is giving $1,250 to the employee each month. The employee chooses a premium or a plan that has a premium of $950, meaning there's $300 left over. That $300 sits in their ICRA wallet, their health wallet, and that accrues each month. So they can decide what to use that on towards the premium, towards the any out-of-pocket expenses, any qualified medical expense, and then it can roll over from year to year. Now, you as the employer get to decide what that money, what happens to that money. So if the employee leaves or is terminated, it comes back to you. It doesn't leave with them. So that's really a new way of how companies have been deciding to utilize this, almost like an IRA for their employees. In terms of different options, there's a ton of different options. Every state's going to be different. I have a couple different things here that you guys can look at to learn more. One is called our ICRA Insider. That's our weekly newsletter. Another is our ICRA Guru. If you, like me, are in ChatGPT or Grok on a daily basis, we've put all that information into a custom GPT so you can ask any ICRA questions related to your group plan or construction of an ICRA. We also have our ICRA Playground and our public quoting tool. Our public quoting tool is really easy to use. You can go in, you can put in when you would be looking for insurance, and you can look at all of the different plans that are available and their costs and the summary of benefits and all of that. So this is really helpful. We're seeing a lot of companies, again, jumping onto this, at least looking at it as an alternative if they're facing a high renewal to see, okay, how much further could those dollars go? Or if they're dipping their toes in the water for the very first time and hoping to apply benefits to their workforce, either to recruit or retain talent. In terms of, I'll just leave you with this. We've been around now this is our fourth open enrollment. ICRA's been around for 5 years. We've seen a ton of growth. We've served over 300,000 employees across about 800 different businesses, small businesses across the country. So this is something that's new. If you want to learn more, feel free to reach out. But it's just one of the many alternatives that you have as you're facing, this kind of chaotic year with the government shut down and all these rates coming in at the last minute. We literally just got all the rates last week. So it's been quite wild to see, different businesses come in that we've never talked to in different industries and trying to find a solution that could fit their needs.
So thanks, Ryan. So a couple of things about ICRAs that I found interesting for my clients. One was people in different states and also at different levels of employment can have personalized amounts of reimbursement. So can you speak to that a little bit of
Yeah.
kind of how you can make this maybe in lieu of raising everyone's compensation, perhaps adjusting this
Yeah.
based on the employees that you.
Yeah. So oftentimes we hear from companies who are like, hey, we just give our employees money, right? We just reimburse them. Well, that money's taxed, right? And then oftentimes they start looking at their, when they have remote workforces and looking at different states, and some states are more expensive than others. So what's nice about ICRA is you can classify 11 different ways. So you can group your employees as like full-time salary, full-time hourly, part-time salary, or seasonally. But you can also do that geographically. So that creates all these other permutations, right? So you could say full-time hourly or full-time salary in California, for instance, we're going to give them 100% of the average cost silver plan, right? So that's the amount that those people would get. And then you could say those people in Texas, or maybe let's pick Indiana or Georgia, where there's a lot more competition and there's a lot more rich ICRA plans. You could give them less money because that money's going to go further. So you could say instead of 100% what we're doing in California, we might be doing 80% in Indiana or Georgia. And that way you can really budget towards these costs, and then you can halt that cost curve because next year you can always increase it or decrease it as well. The trade-off there is maybe the employee is paying a greater share because they are choosing what they want. You're benchmarking at a specific tier of plan. The employee could always choose to buy up. So in the example I gave with the health wallet, I showed an individual who spent less, so they had money in their HRA. Well, if they spend more, then that has to come out of their paycheck, right? And that would be pre-tax, which is really nice as well.
So Ryan, one of the other interesting things here is normally like people just they have to choose marketplace plans to get a reimbursement, perhaps through a QSERA or a reimbursement, other qualified reimbursement program. I know you all have some off-market plans. They're still qualified to be paid for by an employer, but they're not being offered through a marketplace. So there's a wider selection. Can you speak to kind of how that works with your
Yeah.
relationships with insurers?
Yeah, in the past, those what are called off-market or off-exchange plans tended to be cheaper, and that's what we're seeing right now. So a lot of the companies that haven't exited the market, I mean, you mentioned very astutely that some of these carriers are seeing, if these people are pulling out of the market, the risk pool is worse, right? So we've got to increase costs. We're seeing the opposite in certain states where insurance carriers are creating ICRA branded plans off exchange for people to choose from. And they're typically doing that at the silver level. If you think about value-based sales, good, better, best, and options, um, companies like to put everything at the middle to kind of get you to gravitate towards that middle selection. So that's what we're seeing. Typically, they're 10 to 12% cheaper as opposed to group plans, and they have some more support. So what we're seeing with those companies is they're actually they know that they need to retain those customers, right? Think about it this way: if you're on an ICRA, every year you can choose to fire that carrier, to pick a different carrier. So now they've got to smarten up and say, okay, well, if we've got them this year, we need to think of the lifetime value of these customers, and we've got to do right. So it's this big shift in consumer-based healthcare that is just now starting.
So a lot of the folks that we have on are business owners. If they need to include themselves in insurance, is ICRA an option for them?
It's a great question. It really depends on how you're structured and do your taxes. So I saw a number of people pop up that said they're an S-Corp. Unfortunately, as an S-Corp, if you the current IRS rules, if you have 2% or more ownership of your business as an S-Corp, you have to claim any healthcare premium cost that you pay for as a business towards your income. So I'd say S Corps aren't the best, but most of the platforms out there, you can still utilize our platform. So if you wanted to see what was off exchange, you could use our platform to still select a plan that was off exchange. You're just not going to get the tax benefits of the ICRA, but you could still separate out another class of employees and do that, for those employees who aren't owners. But in terms of C Corps, LPs, partnerships, those types of folks, all eligible for an ICRA.
Okay, great. So partnerships, limited partnerships, C Corps,
Mhm.
but S Corps are problematic,
Yeah.
just from the tax perspective.
Just
But
from the tax perspective, as I know,
you can choose a plan.
you could still choose a plan. You're just not a part of the ICRA structure.
Got it.
Essentially, you get classified separately as a $0 owner class, and then you pay for the entire plan probably through your same payroll account or a separate bank
Okay.
account of the business. Yeah.
And so in order to have an ICRA, you have to have an employee. Is that
Yeah.
right? A non-family member who's an
Yeah,
employee? Okay.
exactly. That is the simplest way to think about it.
Okay. And is it 20 hours or 30 hours?
It doesn't matter. There's no minimum. So
Okay.
we've seen people who have part-time folks and seasonal employees that they offer the ICRA to. Yeah, there's no, I guess the question is there a minimum? And I would say, yeah, it's a minimum of one employee that's not an owner that would be eligible for an ICRA.
Okay. So I'm seeing a question from Sina. Can you use an ICRA yourself as a business owner if you also have an employee at
Yes.
a non-family member employee at any number of hours? Is that
Yeah.
right?
Yep. If you're a solopreneur or you're just, you're as a C Corp, you wouldn't use an ICRA, but you could still use an ICRA or QSERA platform to find healthcare coverage. The only difference is you're not getting to take advantage of the tax benefits of this in terms of a tax deduction for the business of all the money that you spend on the premiums or the pre-tax dollars that you're giving to those employees, if that makes sense.
Okay. Okay. Well, Ryan, I know we have to let you go. I know, folks, that those of you who, once we talk through some of the other options, you may have additional questions about ICRAs. In the replay tomorrow, we're going to have the deck that when we send out, we'll send out the deck that Ryan sent along with that ICRA Guru GPT. These questions are perfect to answer or ask to that closed GPT because it is just all things ICRA. What qualifies? Do I qualify? So we'll have that link as well. And I don't know, I think Ash, you might have that. I think we have it in the resources that we'll drop in at the end.
Perfect. Well, thank you for
All
your
right.
time. Appreciate it.
Okay, thanks, Ryan. Okay. So we went a little bit out of order. I'm gonna hop back in. I just wanted to make sure you had enough time to hear from Ryan about ICRAs. We skipped over individual versus small business qualifying, but we got to some of those questions. I'm gonna go back into my presentation deck here and share this with you and just quickly go through that, and then we'll talk with Michelle about some of these options. Okay. Okay, so one of the things that just came up is, what can I participate in? So deciding if you are an individual or family plan or eligible for a small group. For those of you who are on the fence, these are the qualifications. So for an individual in a state with an ACA mandate, that's California, DC, New Jersey, Rhode Island, Massachusetts. Vermont technically has one, but there's no penalty, so we treat them like they don't. You do need an ACA compliant plan as an individual. Otherwise, it's not considered eligible for coverage. In any other state, you do not have to have an ACA conforming plan. That means it doesn't have to offer preventative care. It doesn't have to offer pregnancy coverage, right? There might be carve outs for certain things, but you are not obligated to get a employer level or ACA qualified plan as an individual outside of these 5 states. And if you do, you can look at if you're qualifying for any subsidies, which may be a good place to start for you as an individual, to just check on November 1st what kind of subsidy you might be eligible for. And there is a little space and time if you want to switch to something like an ICRA or a small group plan to do that within a week, week and a half. If you would like to explore small group options, an ICRA, it is any employee of any amount. If you're looking for a small group coverage, you need to have one full-time employee who works at least 30 hours a week. In some plans, they'll allow that person to waive the coverage so that you as the owner can get the coverage. In some, they will not. So if you know that your employee, your one employee who qualifies, is not going to take your health insurance, you need to be specific with whoever you're working with about making sure that they understand what the conditions are going to be. In a small group, you have to pay at least 50% of the premium. And the employee cannot be a member of your immediate family. So this needs to be someone outside, like not your child, not your spouse. All employee-based plans have to be ACA or MEC conforming. So they do include preventative care. They do include pregnancy coverage. They will include minimum pharmaceutical tiers. And there are some cost savings to being in a group. Even if you're just 2 people, you may get more features at a lower price per person than you would on the individual market. So something to consider, like, if you're on the fence, is, would a small group program make more sense for you than an individual if you have employees? So this is sort of the minimum qualification to start having that conversation. Okay, so I'm going to get out of this and I'm going to bring on Michelle, who's been so patiently waiting. So welcome, Michelle. So Michelle is a national broker. She has a long history of working with startups and small businesses and currently is in the not-for-profit market with small and large companies for underwriting, but basically knows the ins and outs of all things in the insurance market, Michelle. So I know, Michelle, we talked about kind of just like, what are you seeing in the market right now when you're working with small businesses?
Well, first, thanks for having me. And I love getting invites, especially as I get older. You start feeling like you're not getting as many invites to things other than to lend some expertise. So I'd like to say that I have some of that. So thank you, Jill, for this. And then secondly, unfortunately and fortunately, there is just a constant volatility. And at the end of the day, it starts with small groups and really individuals that are also small group owners, right? We're all individuals at some point, and You can call yourself a startup, emerging company with super fast growth, family owned companies. I mean, you're all kind of the ones that are driving the economy, but also most affected or first affected. So we could probably agree that it is a volatility, but in healthcare, the cost is obviously so high. So when we see spikes and changes, and not just, increases on subsidies or decreases on subsidies, those type of things, but it's just the laws are constantly changing. So you have to, unfortunately, really just try to stay on it as much as you can. But if you can't, tap into the Jills, tap into these resources that are out there, that there are people like Ryan that sit in these spaces. Keep your ears open, right? Because some things, and anybody who's on this call is just being smart, trying to figure out what your options are, not just in your local area, but also just nationally too. I mean, this is the good first step. You're muted, Jill, for some reason.
So in terms of what we're seeing in the small group market, where sort of, if you want to move to a traditional small group plan, how do you do that? What are some things to consider?
When you say traditional, it's these group plans are start with, could be one person, right? A sole proprietor. I saw somebody, I love the solopreneur comment. I've never seen that before. I love that. I might even use that, Therese. But there you could be one or two. In some and many states, two or more is considered a group plan. So that's your traditional plan. Candidly, I'll give you an example. I work for a large multi-state national firm, but I'm also a business owner, a small business owner. I have my own corporation. My husband is a realtor, and we have everything through our corporation. And we have an actual group plan. Funny you think about that, you would think we'd be on Alliance plan. I am by myself on Alliance plan, but my husband, we have it through his, and we have our son on payroll because we need two people. My son does do work for our real estate company that we have through our corporation, which allows us to have, actually, it was cheaper for my husband to have insurance on his own. There were tax benefits available for it as well. And it's helpful that he's married to a licensed insurance agent as well. So I was able to write the policy, but look for those people that can actually do that for you. And we did the math. And the plan that was actually available here in California was actually better coverage, and we can have tax advantage where we weren't getting that as much through my employer. So think of having as many options in front of you, and really, Jill, at the end of the day, it's doing the math, right? Does it make sense for, if you have two people, or maybe you do have a part-time person, that second employee who's part-time could be considered your second employee in your group plans. Do you qualify?
So Michelle, I know as you kind of look out at like what could you qualify for, there are things beyond like what we think conventionally as like an HMO, PPO kind of thing, right? Can we talk about a little bit about like when you consider something like a PEO or plan, or maybe medical underwriting? When is a good time to like consider those options, which might be less expensive than an ACA compliant plan?
Yeah, I actually think laying them all out. So if you have somebody, so our firm, we insure 1 to tens of thousands. So we have a huge reach and an arm for that. You're not limited to just, a small or large broker. Somebody who is a broker, by definition, has the access to many markets, including PEOs, Jill, which is a great point. It kind of goes back to that math again. Don't think, oh, I could never qualify. If you're two employees, PEOs might, be a good option for you. They also help out. I know there's small construction firms that are getting killed on the non-health side insurance, right, for the property casualty. So that also is something to consider. Look at your entire picture, kind of layout of your entire portfolio of your insurance products. And that's might be where PEO is a better I call it the all-inclusive. Like there's some places and trips that I go on, I love all-inclusive. I just want to sit there and not have to be, nickel and dimed on certain areas. But then there's other areas, of course, that maybe some insurance will cost you less and some will cost you more, and you can just kind of pick and choose.
Yeah. So I think the interesting thing about working with a broker is that you don't pay the broker. Whichever plan you choose ultimately pays the broker's fees. So if
Yeah.
you are trying to figure out these options, especially in your state, I know that last year, like in Georgia, in Missouri, I had clients end up going with a Chamber of Commerce plan that was like an association plan. Like you had to join the Chamber of Commerce and then you
Yep.
could get access to this insurance. And that's coming up more and more. And in terms of like finding local associations that are sponsoring what's almost like a union kind of
Yeah.
plan and getting access to those. Michelle, where kind of like which states and which places are you looking at like that MIWA kind of association plan? Where are we likely to find those? Did we lose Michelle? She put on her hotspot back up. All right, let me see if we get her back. Well, Michelle is cycling. I see Therese has a question of where can we find a PEO? So one PEO, there is a payroll company called Rippling. That's really good. A PEO, for those who are asking, is a professional employment organization. So they co-employ your employees and you. And in that way are able to pool a whole bunch of people together as one giant organization to help you buy national insurance. So it's okay, Michelle, I see we got you back. So a PEO is sort of when you see somebody just like they take care of payroll, they take care of health insurance, they may take care of your retirement plan. You can basically hire them to do all of those things for you, and you pay a management fee every month and then for these individual services. And they are offering national scaled insurance plans that no matter where people are, they can access. And they may have multiple tiers of plans that you can choose. So much like Ryan was talking about, you can set a base plan that you pay for. And if people want to choose more or less, then they can either pay more and get a higher level of health insurance, or have a reserve of funds, or have it 100% covered. So for those that are asking, I'm going to drop in. I've got
And while you're doing that, Jill, I'm so sorry. I know Verizon hates me because it only freezes when I'm on a webinar and hosting. So I just to also add to this, the PEOs in the past, you had to go directly to each one of them. They're becoming more called broker friendly. So we have a list of PEOs that we can certainly follow up and give Jill all of the ones that are out there. There are a lot of brokers that have agreements, or they have ways to make sure that you're treated nicely and with priority as well. So if you need those resources, we'll certainly supply those to Jill for you. And then really quickly, I know, Jill, when I froze, hopefully my face wasn't too awkwardly looking. On the broker side, I just want to make sure you hit home on something important. And the myth is that you have to pay a broker. We're not volunteers. We do definitely get paid. And of course, we get paid through the insurance carriers directly with the commission. I've met more small business owners that have a broker, but they're not doing anything for them. They're not helping them at all. And they're getting a monthly check. Every time you pay your premium, they're getting a check. So if you can change your broker with a letter. You can appoint any broker you want, and literally it's called a broker of record letter. And we suggest when you do that, direct it to a broker that's going to find those options for you, that's going to do the work for you. Because right now, if you have a broker and you haven't talked to them for many months or many years, they're not working for the money that they're getting. And it's not going to cost you any more. If another broker says it's going to cost you more and you're a small company, don't work with them. So thanks, Joel. I just wanted to make sure I got that in.
Sure, sure. So for those of you who may be considering, should I talk to a broker? There's about a 2-week window right now where you quickly need to find somebody and have that conversation.
Yeah.
I just dropped in a directory of national brokers. So if in your network, you can always, after this, send me an email at hello@thejilljames, and we'll try to make a local referral for you if we have one. There's also this directory that I just dropped in. If you want to look for a broker in your area, it should say if they have if they work with individuals or businesses only, you can sort by that in your area and find somebody who may be specific to your state. Some brokers, like Michelle, are national and they're working across multi-state organizations. For smaller businesses, especially if you're all in one state, it helps to have someone local who might understand things like those Chamber of Commerce programs or an association that you can join and get access, or other kinds of plans. So in terms of finding a broker, that's a good resource. I think one other place that we don't really talk about is, oh wait, there's a question. If you are already assigned a broker, do you have to explicitly switch to a new one via a letter, "I was assigned by my state"? Michelle, do you know the answer to that?
Yeah, so a lot of times if you were just purchased something online or something through the state, there's a lot of brokers that are just listed, right? Because you do have to have a broker listed. You can't do like a direct on some of the policies out there especially through certain carriers. No, you're not stuck with anyone. So yes, you can assign any other broker that you want or wish through a broker of record letter. And they were just randomly assigned, or you were randomly assigned, because there has to be something tied to it. A lot of carriers don't want to work with, unfortunately, their customers directly. They want to have a broker in between. So that's probably what happened to you when you purchased it.
Oh. Thanks, Trace. Yes, there is some kind of issue on the website today. It looks like it hasn't been fixed yet. So I do have a healthcare guide. Let me drop in the PDF link, and I think that will be. I dropped that in because there is a terms section. So for those of you who are new to health insurance, my guide, let me pull up the PDF one here. Here's a PDF version if the website is a little wonky. In the PDF, there is a terms section which goes through like HMO, PPO, EPO different levels of plans, what a PEO is, a MIWA plan, an ICRA, all of that acronym soup is in the doc I just dropped in, and also should be like searchable on the blog as soon as that page is working again. I don't know what happened this morning. But also many of the folks that we're talking to today and the resources that I'm mentioning are listed in this, and I'm going to consolidate those into the follow-up email. I know we've kind of like jumped around a little bit. I want to go back to specific questions from you all. I think one of the things that we didn't talk about yet is medically underwritten for those of you who are individuals. Again, if you are not in a state where an ACA plan is required, you do have the old-fashioned pre-ACA option of doing a medically underwritten policy, which means they are allowed to consider pre-existing conditions, but that doesn't mean that they will deny you. So that is an option if you are, again, outside of California, DC, Massachusetts, Rhode Island, New Jersey. Yeah, those 5. So that could be another option for you. And again, a broker could help you look at your medically underwritten options. If you have pre-existing conditions, it's very likely that an ACA plan is going to be the best option for you if it's medically serious, or if a member of your family has a medically serious issue. I know she had to jump off, but Noor Ali, who was here earlier, has an individual concierge service where it's focused on non-ACA plans, and can look at like what you might qualify for if you want to have a conversation about like, would you qualify in medical underwriting? That's her specialty of if you could get a medical underwriting plan or an association plan.
There's a couple extra questions
Yeah.
here.
Okay. Let's see here.
Teresa, short answer is yes.
Yes. So many PEOs will have coverage like Aetna, Cigna. There are carriers who do not participate in the ACA market anymore. They're only employer plans. PEOs, they work with PEOs and establish sort of a national baseline plan. Aetna and Cigna are very common in those. It is difficult in an individual ACA plan to get those carriers, right? You're probably looking at Anthem, Blue Shield, or some version of that in your state, plus probably a couple of local carriers. So, there are a number of nationally known carriers that have dropped out of the individual market. But on a PEO or through an ICRA, you might be able to get access to those because they know it's a larger pool and they're cooperating with those partners to be steered because they still, need small employers. So that might be a place, again, like whether it's if you an ICRA is a little bit more flexible, a PEO may have those hard minimums to look at those, but it's really hard as an individual to get into a PEO. Michelle, I don't know if you've ever seen that. Like it
Very
really
hard.
has to,
I
you
have
have to have
I have
enough.
a friend of mine that just started a nonprofit, had 3 employees, actually 2 full-time, 1 part-time. And they did go through medical underwriting, and we went through 5 different PEOs and 2 of them quoted.
Okay.
So, it depends, but there's of course only 3 of them. But you do have to qualify in PEOs. They're not, and group size minimums as well.
Yeah. Yeah.
There's a great question here, Jill, about somebody that has a sense of, I think it's Heather, about just if you're an individual in California,
Mhm.
there are what's called exchange and off exchange plans. That's what they call them. And so it's covered. California is the exchange marketplace name here. I have to say it's actually I think it's pretty robust. There's a lot of ACA plans that are available. And then there's what's called off exchange, which Blue Shield, candidly, is probably one of the best carriers for individual market right now. They're going to be priced very, very similar to what Covered California is. And, so you do have both options that you can look at. The only reason why you would want Covered California is if you qualify for a subsidy, right? If not, you can look at the off exchange. I will also tell you that be very careful with all individual plans. The carriers are very creative with the types of names of the plans that differentiate networks. So where I'm in Northern California, and there are just some providers that don't accept exchange plans or Covered California plans. If you're on one of those, Stanford sadly is one of them, where there are medical providers. And the reason why it's not because they don't like exchange plans is the reimbursement rates that they get they're contractually getting something lower than they normally would have to. So just keep in mind when you're picking up really individual and even small group plans, they're creatively named because they have variant types of networks that they include and exclude. So that's why, again, back to a broker helping you.
Yeah. So I see a question from Niam.
Mhm.
For states that don't require ACA compliance, do catastrophic plans still exist, having coverage for health emergencies or accidents? Yes, they absolutely do. And in fact, in California, if you qualify for hardship, you can make a hardship qualification. I believe it's California, DC, and Massachusetts all have exemptions based on past medical costs, recent bankruptcy, cost of housing. There's a big long list of reasons that you could opt out of your mandated plan. And I will, again, I think that's in the guide. There's a note in there of where to look. But in terms of if you are not in a mandated state, yes, you can pick and choose. Again, I think if you are not at risk of pregnancy, that's probably the number one thing that brings up the costs of these plans. So if you can get a different kind of plan and it will require you to say, I understand, like this will not cover anything pregnancy related, your costs will drop. There are also, catastrophic coverage plans. There are association plans. There are federations. There are like churches and mission groups. Again, you just have to really read the fine print of what is in and out, what they'll cover for you. But all of those outside of the 5 states with mandates, all of those are still options. They've made a comeback. So if you are open to having something like that, of having catastrophic coverage, you absolutely can do that outside of the 5 states. see here.
Margarita had a question about, do PEOs work with companies or regulated industries? And are they treated most like co-employees? Yes, that's usually the relationship, and then also ACA compliant plans they're definitely ACA compliant. It's like one big giant umbrella group plan, which is why the co-leasing or co-employment exists.
Yeah, in fact, if you're in multi-state, a PEO can be a great solution. Then you don't have to worry about like kind of the coverage network anywhere because it is a national plan in most cases. Let's see. I have a question from Tracy. Can you clarify the qualification for HSA plans in 2026 that bronze plans are HSA qualified? That's right. You have to be in a high deductible bronze plan to use an HSA. So if those plans no longer qualify for subsidies through the exchange. So if you do see cost savings and you want to have an HSA, that is an option. When I looked at bronze plans for myself this year, it was barely cheaper than a silver plan, knowing that they could bump it up because there were, silver is the standard. So I found the trade-off of what I was paying to get the access to the HSA was not worth it versus what knew I was going to pay out of pocket. But yes, that is the high deductible bronze plan is the qualifier to use an HSA. Okay, question from Carrie. Do ACA marketplace plans provide national coverage or is it limited to care in your home state as a digital nomad? That's really a question about what the network is. So in any given state, if you have a PPO, you have access to the network of doctors outside that are under that plan. If you have an HMO, it's restricted to space. An EPO might be a small group of states or a smaller set of doctors on a national basis. But you really have to look at if you're moving around a lot, you probably need a PPO. If you have an HMO and it's only in one state and you're outside of that state, EMTALA will cover you on an emergency basis, but once you are out of the emergency room, you have no coverage in that place. So that's typically with an HMO, does not have any out of network. So an HMO is pretty risky if you're moving around a lot as a digital nomad, or if you have employees who are traveling on your behalf, putting them in an HMO could leave them in a position where they're on the road on your behalf and can't get medical service. Let's see, HSAs before the end. Yeah, I have a couple extra minutes if folks want to stay on. So in terms of HSAs, so the individual HSA, what Ryan was talking about in ICRA is like a health reimbursement account. A health savings account is you're allowed to put away some money, which unlike an FSA does not expire at the end of the year. So there's an allowance. Michelle, it's like 5,500 or did it go up to 7,000 this year?
For
HSA.
I know I'm looking for the individual.
Okay. So
just
you each year if you are using a high deductible bronze plan, you are allowed to save for yourself into a health savings account a certain amount of pre-tax money, which if you don't use it in a given year, rolls over and also can grow with interest. So
the 4,400 for individuals.
4,400. Okay.
Yeah, and then
Okay,
family
more
is
for
8,750.
So you have to pay your premiums, and then the HSA money you could choose if you have any out-of-pocket expenses, you can choose to use it, or you can leave it in the HSA account to grow for the future, and it lives for your lifetime. So if you never use that money, it continues like to be invested and grow. So some people, if they have very low medical expenses and can save money by getting a high deductible bronze plan, will use this as a savings alternative because it is a pre-tax vehicle where you can save money. But it has to be a qualified HSA and you have to use a high deductible plan. The HSA, you have to find a carrier who will underwrite the account for you, but you are in control of the account. It does not come wrapped with, so you choose the high deductible plan, and then you have to find an HSA carrier and make the contribution in order to qualify the HSA. You have to have a qualified HSA account.
Yeah, this is where your broker should be able to help you with that too.
Yeah. It doesn't matter. It's tied to you and your social security number. It is not tied to your insurance. It is a separate account that you are basically creating a pot of money for you that at any point in the future, if you need to use it for qualified medical expenses, you can use it for that. So it doesn't matter whether or not you use it with that carrier in the future, somebody else, or you just have medical expenses down the line and you have sort of the savings account set aside for it. Yes, solopreneurs that have high deductible bronze plans can establish their own HSAs. Yes. Okay, it looks like Tracy's saying that she has a HSA with Fidelity. Yeah, often it's with a brokerage firm. You're going to have to find somebody that will qualify for you. Fidelity is a great option. They have very low fees and they're easy to open. It's easy to open an account. I just want to make sure as we're wrapping up, I do have some key dates. I want to make sure that we get in here. So as you're thinking about your choices, I know we've thrown a lot at you. There are a few dates to know. Okay, so right now is a window to evaluate your options. The exchanges are going to open on November 1st. There are a few states where they're already open. Because again, government shutdown, there is, some floating of subsidies. Some exchanges are waiting until the very last possible moment to publish their rates because, as you heard Ryan say, they're, really just coming in very late this year, and, there are alternate rates should extended subsidies come back. So what you see on November 1 is kind of what you get. If you want to move into a small group plan, especially if it's a PEO or requires being part of a payroll system, you need to do that by November 7th. So you have about a week to do your research and make a decision on this. And if you are moving in a group direction, a PEO, a MIWA, any of those, you'll need to decide that, most likely by November 7th, because options will start to close after that date. And you also, need to get on board and have your team do open enrollment. For most small business plans, that closes around December 7th. If you're on the exchange, opens November 1, closes December 15th. And on December 15th, you've got to have your first premium payment in as well as your plan selection. So if you haven't made that first payment, you haven't bound your policy, and it won't take effect for January 1. So again, one of the reasons we had this today, even though everything isn't settled yet, is there are still, there's a small window of time of if you are comparing, should I be individual versus should I do a small group plan or some kind of alternative plan? Which of these options is best for me? The next week is really the critical time to figure that out. So with the broker options, this will be included in the deck and also the links in the replay. I dropped some of this in. If you do want to look at this medically underwritten concierge, there's a referral link here. This is the directory I dropped in. If you have specific questions after this, because I know we covered a lot of stuff, you can drop me an email at hello@thejilljames, or if you're looking for specific referrals or direction, I'm happy to help you out with that. And yeah, that's everything I have for you. So we do have the health insurance guide on the website, and also the PDF that I dropped in. It's the same document, it just the PDF is printable and kind of a little bit easier to use than a long website. So if you do want to look through the PDF, there's a glossary of terms in there. There's the individual versus small business, our recommended partners for a few different services that we work with, because we're in the 1 to 5 market for most of our clients. Ryan's site, there's a quote tool. The ICRA Guru is great for asking questions. The brokerage broker finder, especially like in the next week, get on the broker finder if you are looking for a broker, or ask your local friends who they use as a broker. And that's a great way, but like you need to do that really quickly. Yeah, if there's anything else that you see in here and you have questions, please reach out. I will be putting more information in the newsletter over the next few weeks as we get new resources and more information comes out. Yeah, I think that's everything that I have for you. So in terms of anything specific, please feel welcome to follow up with us via email. Tracy, thanks for introducing me to Michelle, and thanks for joining us. Good luck out there. I know it's a really difficult market. These are sort of the best of challenging choices, but you know, we want you to find something that works for you. I know it's all expensive, so kind of have the best of what we can get to this year. And you know, if you're so moved, call your congressional reps and encourage them to reinstate extended subsidies. That will help out the whole market if it happens in the next few days. So that's also a really important thing to try to do if this matters to you. Okay, so I'm going to leave it there. Thank you to Michelle. Thank you to
Thanks so much
Ryan.
for having me.
Thank you to all of you for joining. And I'll look forward to seeing you at our future newsletter events and with your follow-up questions. Thank you very much.
Thanks, everyone.